Hello friends, Eric Soto here, TC Orlando Homes. We've invited Brian Peck, our good friend from Nona Mortgage, to come and talk to us about the 8 things that first-time buyers need to know about getting a mortgage.
Thank you very much for having me, sir.
We're so glad to have you. Let's get into it.
Got it.
So the first question on the docket is, what is the effect of my credit score on my interest rate?
So credit scores affect interest rates in a variety of ways. Certainly you want your credit score to be as high as possible to get you the cherry pick of the best rates out there. But credit scores are put into categories of every 20 points. So if you start high coming low, or you start at the 600 to 620 is one bucket that the lenders put you in. 620 to 640 is another bucket. And every time you hit that 20-point bucket mark, you get a better price rate and a better interest rate that can occur with that. We have ways to be able to help and get your credit scores to where they need to be.
Okay.
Minimum credit scores these days, you want to be in the 600 to 620 range minimum.
Okay.
The better your score, the better the rate will be.
Awesome. Thanks so much. Well, that kind of brings me into the next question, which is, what if I have bad credit?
So bad credit happens to good people. It's just one thing, some crisis happens sometimes. What we want to do is we want to work through the bad credit, what caused it, what are the issues with it. Some bad credit isn't bad at all. It's just improper use of the credit. We want to pay some stuff down.
Okay.
Some bad credit things are some things that occurred in your life, maybe medical situations. We can work on moving those to the side. Some bad credit is stuff that does require some timing to occur. And so we want to work through those things. It's easy to massage credit, to bump your credit score by 10 to 20, even 40 points, just doing a few key things.
Okay. And is there a loan product out there for me if I do have that little bit lower credit?
Absolutely. So FHA, is a great program, allows you to still put a low down payment. The credit score restrictions allow you to go a little lower into the credit score, and you still get a very good interest rate.
Okay, great. So the other thing that I was wondering about is, what's the difference between a mortgage broker, a direct lender, and a bank?
So a bank is going to be beholden to whatever products they have, with their boxes that they put you in. A broker like myself is able to look through the many different lenders that are out there, and not all lenders look for the same thing. Some lenders are very good at a VA, some lenders are very good at FHA, other ones just love the conventional because their investor portfolio behind them is what they want. And so I'm able to search through those various lenders, a dozen or so, find the programs that are applicable to this particular scenario, and find the best lender with the best rate and the best program and down payment for the borrower.
So a mortgage broker, to put it in a nutshell, can go to various sources, find the best product for that individual.
Absolutely, without the individual having to go shop from bank to bank to bank to bank, and they probably will come up with the same product one single time.
You do all the work for them.
I do the work for them.
I like that. Okay, great. Well, let's talk about a misconception that is out there. What do people do, or is there an option for people who don't have 20% down to put on a mortgage?
Absolutely. So the 20% down moniker came from a bygone era where that was the amount of money that they wanted you to have saved so that the bank could feel comfortable lending you the money. Well, banks, again, we've just decided that mortgage lending is a program that allows you to have very different varied options out there. We have 3.5% down programs, 3% down programs. VA programs are 0% down programs.
That's my favorite one.
So there are a lot out there that you don't need the 20% down anymore.
Okay, great. So most common, VA 0%, FHA 3.5%. There is a 3% conventional, has a few caveats out there, so 5%.
5%
is very common for conventional. And I mean, we love our veterans with that 0% down.
It's a fantastic loan.
Let's talk about what is the first-time buyer loan?
So first-time buyer loan is someone who is either been out of the game and hasn't owned a home for a little while, or it is truly their first time they've ever bought a house, and they usually have not accumulated enough cash to be able to put a larger down payment on because they haven't accumulated the equity from owning a home previously. So a first-time buyer has limited amount of down payment. FHA loans are fantastic for this. It was created for this so that the borrower would only have to come up with 3.5% down, which is an easier amount to be able to save. The first-time buyer programs out there also involve usually some money that is available through the county programs to allow you to have some of the down payment put forward for your loan for you.
If I don't have the 3.5% down, could I maybe get that from a family member?
Absolutely. So gift funds are allowed through FHA and through conventional.
Okay, cool.
You just have to document where the money comes from, as always.
Awesome. Okay, so for the first-time buyers out there are options for them with limited down payment, limited funds to get them into a loan. I like that.
Yes, sir.
So question number 6 is, what are the steps of applying for a mortgage?
Absolutely. So these days, it's never been easier. There's online availability to be able to just find a link that we've sent you. 5 minutes later, you typed all your information in, it downloads to our systems, we run the pre-approval, and off you go. After that, we're going to submit it to the underwriting team for them to do. We order the appraisal to make sure the appraisal came in.
Nice.
The underwriter comes back with an approval with any remaining conditions. We satisfy those, and we're at closing. It's just that simple these days.
That was easy.
That was very easy.
I like easy. All right, and my approval letter, how long is that good for?
So and the credit report is good for 90 days. So that's basically the limitation that we have. We'd have to order a new credit report. It could be the same credit score. It could be a little bit different depending on the profile during those 90 days.
A little worse.
That's right. So 90 days is usually where we qualify.
Okay, pull credit, 90 days. That's easy enough to remember. And the final question is, what would you say the top 3 things you should avoid, absolutely avoid doing during the mortgage process?
Yes, so there are certain things that give mortgage brokers heart attacks. One of them is I bought a new car or opened up any other line of credit during the underwriting process before you close is gonna cause a lot of questions and
buying a ton of furniture the week before closing.
Absolutely. Stay away from those stores, stay away from any opportunities or discounts that might, seem good, but it's going to throw a wrench into things. One of the other things that always gives a mortgage broker a heart attack is when they call up and say, I'm changing jobs, or I'm out, I'm doing something different in that realm. You definitely want to have continued and likeliness of continued employment is how the underwriters look at that. So that always is a concern.
So even if you're mad at your boss, don't quit your job. If you're going to switch your job, call your mortgage professional first.
Absolutely. There are ways to do it. The last thing is large cash amounts moving here and there. So consolidating your cash for cash to close. Underwriters track every last little dollar, to make sure that it's all sourced properly. And we want to make sure that that's all tracked properly.
I gotcha. Okay, so don't take that mattress money and just shove it into a bank. You've got to be able to verify where that cash is coming from, whether it's coming in or out. I assume in is much more stringently watched than money going out.
Indeed.
Okay, great. Well, thank you so much, Brian, for coming in and sharing your insight with us. Hopefully you guys found this informational, helpful. Please give us a thumbs up, share with your friends who are also shopping, subscribe. We got a lot more information to share with you on these topics.